Having given this introduction both to litigation finance in India and the IALF, I would now like to move to the panel discussion of the day, starting questions to the industry players. Today we have 4 industry players with us, all of them coming from renowned funds across the globe. We have Alain Grec coming in from France. We have Tom Glasgow coming in from many jurisdictions, including Singapore. We have Dilip Massand coming to us from UAE and Sindhu Sivakumar coming to us from UK. We're going to hear them and see what we can adopt from India and what they think India can do in the global space. Starting with Alain. Alain, how do you think third-party funding can improve access to justice, especially in the Indian context?
Thank you, Pratik. So I'm very honored to be part of the funding team of the IALF. So I will start with some basics. Third-party funding, as you very rightfully described it, is at the crossroad between finance and dispute resolution, which makes it extremely special and a delicate business sector. I would like to describe third-party funding as a kind of 2 horses coach in order to well understand the matters I will elaborate upon after that. The first horse is the provision of equity, of financial monies. The third-party funder needs monies, and naturally this consists of convincing investors to entrust the third-party funder with, well, long-term monies. So this horse means that the team of the third-party funder is accountable for this money which has been provided by the investors. And on the other side, this money cannot do anything if you don't have the second horse. And the second horse consists of cases seeking for dispute resolution, disputes seeking for resolution, and which at a certain point of time are seeking for a funding solution, a financial solution. This can be very well coming from companies which have been weakened by the manage it has suffered, or from sophisticated companies which want to allocate their financial means on a risk-reward perspective or outlook or equation, meaning that they will try to find out the rationale behind funding the dispute resolution proceeding or funding the takeover of a competitor or a building of a new plant in order to grow their business. Once we have said that, these 2 horses, then we can understand that third-party funding can improve access to justice. Why? When a funder accountable for the equity capital of its investors is looking at a case, it will have to understand that the claimant company, if we are speaking of a claimant, wants first of all to get its rights for a compensation recognized by a tribunal. Secondly, has to have a clear picture of what amount you will get as a compensation for the damage, and also if this compensation will be finally paid. And the third-party funder is at all these 3 issues on a soft way, soft factor. First, the third-party funder will have to dedicate its expertise on the legal side of the claim, on the understanding of what will be or what should be realistically the compensation, and also at working on the recoverability of a future judgment or arbitration award, which means that during the analysis of a case, in a fully aligned side angle, or a side angle which is fully aligned with the claimant, the third-party funder will assess all these points, and at a certain point of time, it will be able to say, I'm not really confident, or I'm too uncertain on certain points, which is extremely helpful for the claimant seeking funding, because it enables him to understand where it is weak, or where maybe he was not fully aware of certain uncertainties. This is the soft factor. So to better understand, and maybe also to improve the case analysis, the case strategy in this analyzing part. But also the hard factor is naturally that the third-party funder will decide to not to monetize, but to de-risk the claim by taking by bearing all the costs of the proceedings, or by buying a judgment if we are speaking of that. But let's stick to the funding of a proceeding. Externalizing the financing, the funding of all or part of the cost of the proceeding is naturally easing access to justice. So the most obvious example or illustration of that is if you have a liquidator or judicial administrator having to manage a company which has gone bust. Naturally, it has no mean at all to put a case before tribunal, and last but not least, he cannot afford to bring the state-of-the-art law firm for this type of case. The third-party funder will enable it. So it's an illustration of the easing access to justice, which is core in the third-party funding. So another important part to understand when we are speaking of third-party funding is what matters, what cases are apt for funding. Not all are. It's not a universal solution or possibility for a case to be brought to justice. Thinking of the first horse, the fact that the third-party funder is accountable for the financial means that were entrusted by the investor to them, to the third-party funder on a long term. We are speaking of 6 to 10 years. Then naturally, the third-party funder will have to have a very close look on the jurisdiction. Is the tribunal competent for the case? The legal merits, are they strong enough that a third-party funder can put this money at risk on the case? And around that, the consistency of the story. It's extremely important that the third-party funder can understand and the consistency of the story which led to the rising of the dispute, its chronology, it's the transparency of the behaviors, the respective behaviors of the opposing parties, it's common sense. Also, as far as a third-party funder will seek remuneration on success, it will be extremely important for him to understand the quantum, what is the amount of the claim on a realistic and documentable basis. And this is naturally key, which means also that certain matters couldn't fit for third-party funding. For example, if it's expected that the dispute will be resolved in kind or with attribution of a contract, it's much more difficult for a third-party funding to derive a remuneration from that, or if the dispute is just a matter of interpretation of a contract clause without compensation issue.
Thanks so much, Alain, for that detailed reply.
Sorry.
And what I'm going to do is quickly jump to Tom. And Tom, you guys have been looking at India closely, and there's a lot of news and buzz in the market of your inroads. Do you think India is ready for third-party funding?
Well, thanks, Pratik. That's a great question. I too am honoured to be here today and included in this working group for what's a very important initiative for our industry in India. The fact that we are here today to launch this association is certainly an indication that the international funding industry is gearing up for India. At Omni, we are already actively supporting Indian businesses in their offshore disputes. And while the local Indian dispute landscape has its complications and has had delays in the past, as you mentioned in your introduction, there have been meaningful improvements in the Indian legal framework for arbitration, enforcement and insolvencies that should give funders increasing confidence in the Indian market. That is certainly the way that we are looking at it. I should say that we still have a lot to learn, and those of us wanting to develop the market in India will need to be willing to adapt and to be creative to meet the specific local needs and local risks. And that's perhaps one of the key learning points from our experience at Omni over the past 30 odd years, going into many new markets. Local knowledge and local understanding is absolutely critical to risk management and success. Although we want to bring the best international practice to India, we're going to need to work very closely with all of our local colleagues to properly understand the market and ensure its success here.
And what's of interest? What is the most interesting and the least interesting disputes in the Indian market for Omni Bridgeway?
Well, there's many potential opportunities that we see. Foremost, as I mentioned earlier, we're already actively assessing applications and funding Indian parties involved in international disputes. That includes international arbitration and foreign litigation. And the high levels of inbound and outbound investment in India mean that trend is only likely to continue, I think. These types of cross-border deals often give rise to very high value and complex disputes. And in that space, we've seen interest from a wide range of sectors in India, including in energy, resources, construction, TMT, insurance, pharma, and more. And for us, another key focus is helping Indian parties to collect on awards and judgments and debts against foreign parties or foreign assets, leveraging off the expertise we have in-house for asset tracing, intelligence and enforcement. And those opportunities arise not only from speaking to Indian corporates and law firms, but also from financial institutions and resolution professionals handling and managing insolvent estates. So that's sort of the international piece. Looking more locally, I think the domestic arbitration and enforcement space is interesting, especially in light of the developments in the legal framework I just mentioned. As I think many of us will appreciate, there are many Indian businesses with substantial unrealized value tied up in domestic arbitral awards and late stage arbitrations, particularly in the construction and infrastructure space. And I think there's real scope there for our industry to help those businesses leverage their contingent claims and provide financial relief while supporting the enforcement of them. There's probably many more opportunities I could go into. It's a very large market, but with the time we have, hopefully that paints a bit of a picture.
Right. I think closely connected with this is, of course, financing litigation needs sophistication, both in the legal market and in the industry. What are these factors which exist outside, and would you like some of them to come into India, and do you think some of them already exist in India?
Yes, okay. So our industry's come in leaps and bounds over the past 10 years or so. Alain was talking about access to justice. And in the past, that was the focus. We were supporting those claimants that could not afford to bring their claims to access justice. And that is still true to a large extent, but increasingly and really by some margin now, our most common clients are well-established corporates seeking to offset risk, monetize claims, and avoid the diversion of capital away from their core business needs. So in that sense, around the world, litigation funding is essentially being used as a corporate finance and risk management tool in quite a sophisticated way, but also in a very unique sense. And litigation finance really is unlike a typical bank loan or insurance, really for four key reasons, I would say. And this is hopefully a key takeaway for people today. But firstly, it's the only form of finance that allows you to leverage the value in complex contingent claims. So we as funders treat litigation and arbitration as a valuable asset class, and most financial institutions, at least traditional ones, won't do that. Typically also litigation funding is done on a non-recourse or limited recourse basis. And that means we only recover our costs and a return on our investment if the case is successful. If the case loses, we bear all of the cost and risk, and we would have no other recourse against the funded party. So in that sense, it's more akin to a transfer of risk than a loan, and it can provide complete downside protection to the client. Thirdly, and linked to the second point there, because it is non-recourse, there is typically no corresponding liability to pay as you would have in a regular loan. So it often means there's no negative impact on the balance sheet of the business. The company is effectively just bringing forward the value in its contingent claim, and that's obviously very attractive to financial controllers and CFOs and the like. Fourthly, again, a distinguishing factor from traditional forms of finance, if you work with a professional funder, it comes with those additional non-financial benefits, the strategic support that we can provide, leveraging our international experience and expertise, as well as the messaging it can send to other stakeholders in the dispute, such as your opponents or your investors and managers, and so on, as to the strength of the case that you have. So those factors are all leading to an increasingly sophisticated use of our funding by corporates. Those benefits are also being amplified by the increasing practice of bundling together portfolios of cases in one funding package. And the benefit of that is it allows the client to fund a much broader range of disputes, including smaller claims, non-monetary claims, and even defences. From our perspective as funders, a portfolio arrangement might also help to diversify our risk and therefore improve the funding terms that we can offer. Finally, on this point, our funding deals are becoming increasingly bespoke. We're often funding not only costs, but also increasingly other general business needs. We're sometimes purchasing claims or awards outright or providing a substantial advance on claim value. Conversely, in some cases where clients only want to reduce a certain amount of risk, we're merely sharing the costs with them. So it's really a question of finding a solution that meets the particular client's needs.
Thanks, Tom, for that detailed explanation. And I think you make some very interesting points, which is needed in the market right now. People are looking for more capital. The Indian market has suffered from COVID like other markets. Need of capital exists. There is a good need to leverage out your existing disputes and raise finance. A lot of people attending come from such companies who are in the need, and I'm happy to hear that Omni Bridgeway is looking to partner with those members in the market and give them some respite. But I do know that when funders like yourselves look to invest in the case, they like the lawyers to have their skin in the game as well. The funders generally don't like to invest internationally in the case where lawyers are not tied down by the hip. At least that's the perception. And some legal regimes don't allow that. India is the biggest example. And Dilip, as a funder, what do you think? Does this really have a dampener in India? How do you think it can work? It is not common for Indian lawyers to have contingency fees, and how common is it outside? How common should it be otherwise?
Thank you, Pratik. That's a great question. Let me also say that I'm also greatly appreciative of being included in this group. And for me, this is probably part of my personal journey as a prodigal son, returning back to my roots, having been born in Bombay, but left when I was 6 months old. So thank you for this opportunity. When you talk about how common it is, in our experience over the last 10 years, we've seen that it's quite common, and it is something that a funder will look at in their checklist. Is there a modified fee arrangement? Is it a contingency? Is it a conditional fee arrangement? But I want to go back to something, because I loved your analogy of funders as general contractors. And I would add to that we're also construction managers at risk. And the last thing I did in the law in New York, we did a contract for American Airlines, which was integrated project delivery. And we copied British Petroleum's contract in the North Sea, where all the trade reduced their fees and took a piece of what the owner set aside as profit with an uplift if we all hit the schedule. Now it's interesting, in construction, we called it pain share, gain share. And when I got into litigation, we took those same principles, or litigation funding, and obviously with a slightly more sophisticated audience than New York City contractors, we called it an alignment of interest. So, for most funders, as in anything, I think you want to see an alignment of interest between all the stakeholders, the lawyers, the claimant, and the funder themselves. America is interesting because lawyers can go on 100% contingency. And the problem there is, as a funder, you might find yourself in a situation of adverse selection with the law firm, where they're keeping their best cases for themselves and they want to share the risk with you on what's not the cream of their crop. Look, in all the jurisdictions that we have been involved in, or most of them, the UK, we saw modified fee arrangements come into place. We see when we co-invest there that the other funder will also, have that as a question mark. So it is fairly common, but as funding evolves, as both Alain and Tom have said, the industry has to evolve. The industry has to adapt. By no means are we going to be dictating terms in local jurisdictions. We came out here into the UAE 10 years ago, fairly complex place to navigate. And, we had to come up with ways to do business here. I think the same thing for India. I don't think anyone is in a position to dictate to Indian law firms, you're going to have to put skin in the game. It's a big market, it has its challenges. We want to be collaborative. We want to sit at the table. We want to say, look, this is something we would be looking for. Can we do it? Can we not do it? And if we can't do it, so be it. This is the case in Singapore right now, that you cannot, law firms cannot work on a success basis, and funders accept that.
And how do you do that? How do you overcome this? Because it seems like a big challenge. You're suddenly increasing the budget upfront. So how do you overcome that?
I don't know if overcome is the right word. Nobody wants to overcome something. I mean, look, I think it's a matter of, engaging with the Ministry of Law, engaging with practitioners, engaging with the governing bodies that are evolving. In the UAE, it's interesting because we have here a system of legal consultants and then advocates. And so what we've seen evolved is legal consultants may come to you and say, well, we have the flexibility to go, on a modified fee arrangement. But then the advocate absolutely has to get paid in full. Now that's what's happening in an evolving jurisdiction, right? We've talked about Singapore may consider changing, the rules in a few years down the road. but it's the funders that get involved and make a significant contribution who will be able to have a seat at the table. You know, at the same token, you do hear creative strategies. You'll see a law firm say, well, why don't you enter into the funding agreement with our London office or our New York office, and we'll come into a transfer pricing model. We haven't done that, but that's creative. I give people credit for that. And then we've seen situations where they say, well, why don't we take the claim, put it into an SPV, and all the stakeholders will have an equity interest in that SPV. And that will be in a different jurisdiction. We have not done that either, but you know, lawyers can be surprisingly creative. But again, these are structures people might be playing with. So I don't think it's about overcoming. I think it's about saying, you know, we will have to feel the pain on this one. And sometimes it's ironic. The law firm is sitting there regretfully saying, we wish we could take an uplift, but we can't.
Now, there are many people who do share the sentiment, and there are mixed opinions in the Indian market on this subject. But I do appreciate we have to move with time. And, you know, I do agree that tomorrow, if Singapore brings in this rule, and, you know, as we know, 50% of SIAC disputes come from Indian users, foreign disputes, it would be very unfair competition for the Indian firms who are competing in that market for those arbitrations. They would simply single out Indian firms from business for all that international dispute work, which would simply go to Singapore because they can get into a better fee arrangement. So I think if there are any regulators or players listening into us, please note this, that if India needs to succeed in the litigation finance market, it needs to shake up and move the Singapore direction and maybe look at some form of conditional fee arrangement. I think since we are on the topic of fee and, you know, we cannot go into contingency, I think the next obvious way to move would be to have a good direction on what the fees or the total budget of the project is going to be. And I want to ask Sindhu this. You guys do pretty much large scale, large size litigations. You know, you're pretty famous for doing the ones which are large in size. And do you cap fees for those big projects, or how do you budget for them?
I mean, that's a really good question. I mean, taking a step back, I think the thing to remember is at the heart of every funding decision is the economic analysis that Alain went over, right? A funder is only going to fund a case if the ratio between the investment and the expected damages means that it can earn a decent return on its investment and the claimant gets a fair share of the proceeds. So the agreement as a whole is fair. Now, central to this economic analysis is a budget, which you guys, the lawyers, typically prepare and present to us upfront. That budget basically sets out how much we can be expected to invest in a case. Now, obviously, if that budget keeps changing, there is a risk that midway the case is no longer economically viable, either for the funder or for the claimant. So budget adherence really is pretty important. And one way of ensuring this, obviously, is to have a cap budget. Now, what that means is the lawyers carry the risk for any time that they bill over the agreed budget. I don't think it has anything to do with the size of the case or the amount that's being invested in the case. But in a jurisdiction like India, where these lawyers have no skin in the game or no financial incentive really to stick to the budget, I can see cap budgets being negotiated. I mean, there may be other reasons, right? A lawyer will want to stick to the budget, reputational, etc. But at the end of the day, without skin in the game, there's no real financial incentive.
Right. And, budgeting for a litigation sounds a pretty difficult exercise for many, right? There are so many uncertainties when you approach a litigation. You can't predict what's going to happen 2 years down the line, what skirmishers are going to come in, what guerrilla tactics are going to be played on you, how many proceedings would be increased and decreased. How do you advise lawyers to budget for this today if you are requiring them to cap? Because that's a big financial risk. So how do you budget? How do you approach the budget?
Yeah, look, budgets are obviously central to a funding decision, right? They influence everything from whether or not to fund, how much to fund, and on what terms. So safe to say, sort of, they're relied upon quite extensively. When lawyers are preparing budgets, I think it's important, obviously, that they be forward-looking. But more than anything else, I think what's always appreciated is to see a budget that's both realistic and comprehensive. So as much as possible, anticipate everything that's going to happen in the case and be realistic with the numbers instead of, I think, preparing a budget that looks financially attractive and that may then have to be changed. I think it's always better to have a realistic budget upfront. And I think, look, and most funders are, ex-litigators. They can work with the lawyers and the law firms in preparing and in finalizing a realistic budget.
And once you cap it, I'm just thinking from the lawyer's perspective. Now, once you cap it, you think there is a chance to vary or increase it because, things can go wrong no matter how much you try to think.
Yes, I mean, I think with everything I've said, of course, litigation's never entirely predictable, and most funders, as ex-litigators themselves, have sympathy for this. Assuming the merits of the case haven't fundamentally changed, it's also in their interest really to see the case through to a successful resolution, right? So when there are, I think, unexpected changes to a case and the budget needs to be increased, I think most funders will try their best to make it work. Of course, the economic analysis that you do upfront will need to be revisited to see if, even with this increased budget, will the funder still make the anticipated returns? Will the claimant still have some amount of the proceeds, etc.? Oftentimes, this may entail some sort of compromise from some or all of the parties concerned. So maybe the full increase may not be agreed to and the lawyers will have to take a little bit of a hit. Sometimes the funder may seek slightly revised terms, so maybe increased returns because it's putting more capital at risk. Sometimes, I mean, if it's a very substantial increase and depending on, how big or small the funder is, the parties may also need to look at options like maybe bringing in an additional funder or maybe having the claimant chip in with the funding. So I think, look, litigation's unpredictable, budgets can change. Funders at the end of the day will want to make it work as much as possible because, as Tom said, it's non-recourse. So it's in everybody's interest to see it through to a successful resolution. But that said, it's never quite ideal. And I think as much as possible, if you have a realistic budget upfront, that's always the ideal scenario.
And when they do change dramatically, it of course would affect the client's economics, or would it also affect the lawyer's economics in the case?
I mean, as I said, it's both, right? I think the funder will sort of have to think about whether it's still economically viable for them. It may impact the claimant's share of the returns. The lawyers may need to take a hit. That's all subject to negotiations. So I think it has a bearing and not necessarily positive on all of the parties involved.
Right. I want to move back to Dilip at this point and ask him that if this is the scrutiny on the level of budgeting, is that the same scrutiny a funder would like to apply then to one, appoint the team, because they would like some people, they would know budgets of some people, and also on the strategy of the case, because in certain strategies the budget can be used in a much cheaper way and you can really finish things in a much cheaper cost. So to make the budget, do the funders come in to say, okay, we want to control the budget, we're going to select a team, we're going to have say in the strategy?
I think it's highly situational. Look, I can speak to our experience. When we came out to the Gulf 10 years ago, we were dealing directly with principals on investment disputes. And so, you would sit at the table with the general counsel, with the CFO, with the chairman, and they wanted you to come up with a strategy because, they weren't always comfortable with multi-jurisdictional disputes. And A, they were litigation shy. B, they were shy of certain jurisdictions. So if you had the experience to say, this law firm has this track record in, you know, whistleblower cases in New York, and here's how we can structure this, et cetera. You know, in instances like that, you're very involved. I think, you know, Tom might speak to this too. I think in asset recovery cases for banks, as funders, you get very involved, and the bank wants you to be involved in that. They want you to put together your investigative team, find out which jurisdiction there are assets in, and run that. Look, in certain instances, if you and Pratik came to me with a case, I would probably sit back and say, okay, let's go through it, you know, let's do some diligence here. Maybe I'd reach out to Sindhu and say, Sindhu, do you want to co-invest this with us? And maybe, you know, the work would be a little less, and the selection, when the team comes to you and a law firm with credibility comes to you, you're not selecting the team at that point. You're working collaboratively.
Right. I think the last question in this session I want to put to Alain, and you know, I think this is something which goes through everyone's mind. What are the frequent reasons why you reject a case? Because we see a lot of funding being rejected, right? You guys fund 3 or 4% or 5% of traffic coming to your window. What are the few key reasons you reject the case, if you had to name some?
Well, for this question, it's a common sense answer. Naturally, if the different risk areas are not assessed as solid enough, then the third-party funder will not want to put this money at risk. But so frequently what we see is, if we are speaking, for example, of arbitration, jurisdiction can be a key issue. Is the arbitral tribunal really competent for this case? A second point where it's quite frequent also is the difficulty to substantiate a quantum. So you may have from the lawyer or from the claimant the idea of, that the quantum is that much, 50 million, but when you are making a deep dive assessment of that, you have some real difficulties to substantiate that it's more than, let's say, 5 million. Then it's an area where a third-party vendor will consider that the stake of his remuneration is too high for this core of the quantum, and it's not sound that the stake of its remuneration takes most of the future proceeds. Recoverability is also naturally a very frequent reason why we would reject a case, because you will see what is the track record of the opposing party in terms of payments, or is it very weak, and maybe in 1-2 years it doesn't exist anymore. And that's also, I would like to point out the ethical environment of a case. If the third-party vendor is not comfortable with the transparency of the party it would fund, or the environment of the case itself is too opaque, then it will not also take the case. Also because it could go bust before the tribunal when something appears which is insane or linked with corruption. That is also a part of the cases which are rejected. And also, last but not least, are the parties, the one or the other, so fragile that they could disappear during the proceeding.